Welcome in. Today we're unpacking a deceptively powerful idea. Restaurant inventory management is not just counting boxes in the walk-in. It is one of the biggest profit levers an operator can control. Every tomato, every bottle, every pound of chicken, every takeout container, and every spoiled ingredient tells a financial story. In 2026, with supply chains more volatile than ever and food costs eating into margins like never before, there's one operational discipline separating thriving restaurants from those barely surviving. It's not your social media marketing. It's not your celebrity chef. It's something far more fundamental. We'll follow inventory from the delivery truck to the storage shelf, from recipe to plate, and from food cost to profit margin. And once we see that path clearly, one question becomes unavoidable. How much money is hiding in your walk-in right now, just waiting to be recovered? Here is the hook. Your profit margin in the restaurant business is resting on a knife's edge. If you don't know what food came in, what food went out, what is still sitting in the back, and what was wasted along the way, you genuinely do not know where your money went. Tying up too much cash in stock leads to spoilage, negative cash flow, and a walk-in full of expensive mistakes. Carrying too little means telling an excited guest that their favorite dish is unavailable. Industry data from 2026 reveals a shocking truth. Most independent restaurants bleed between $25,000 and $50,000 annually through inventory variance alone. That's the gap between what you think you have and what you actually have. And here's why this matters more than any other operational metric. Every dollar you recover through better inventory management is a dollar of pure, uncut profit. No additional labor cost, no incremental overhead, no marketing spend required, just money you were losing that you now get to keep. So why are so many restaurants still getting this wrong? The answer is deceptively simple. Operators have been using Stone Age tools in a digital world. Picture this. It's Sunday night. Your manager has been on their feet for 12 hours, and now they have to spend another 3 counting every single item in the kitchen with a printed spreadsheet and a pen. They're converting pounds to ounces in their head while standing in a freezing walk-in, trying to remember if that case of chicken arrived last Tuesday or the Tuesday before. One supplier sells by the pound, a recipe uses ounces, another item comes by the case, and the chef measures by portion. Prices change midweek, invoices pile up, and someone still has to manually enter all of that data and cross-reference it with crumpled paperwork. This manual process doesn't just waste 15 to 20 hours every single week. It fundamentally cannot keep pace with the velocity of modern restaurant operations. By the time the data is compiled, it's already obsolete, and you're making decisions about tomorrow based on information that's older than the soup du jour. Here is where everything changes. The breakthrough isn't about working harder or counting more carefully. It's about building what we can call an inventory operating system. A structured, repeatable methodology that removes guesswork from every step. It starts with organizing physical spaces so that your count sheet actually matches the shelf, the pantry, and the walk-in. Label and date everything. Implement first in, first out so older ingredients are always used before newer arrivals. Then establish data-backed par levels, the minimum stock needed to meet demand, plus a small buffer. Count on a consistent schedule, whether daily for high-value proteins or weekly for broader dry goods. Critically, train the entire team to record waste, spills, receiving discrepancies, and portioning errors, because inventory intelligence cannot live in one person's head. And most importantly, connect your counts directly to sales, recipes, and costs. Once that system is in place, the restaurant can finally measure what is truly happening, and that measurement is where the real money is found. Now come the findings, and this is where inventory tracking transforms into genuine financial insight. The core formula is straightforward. Beginning inventory plus purchased inventory minus ending inventory equals your cost of goods sold. Divide that by total sales, and you see COGS as a percentage of revenue. But the deeper breakthrough comes from comparing theoretical inventory against actual inventory. Theoretical tells you what should be left on the shelf based on your recipes and your sales data. Actual tells you what is truly there after waste, theft, spillage, breakage, and portioning errors. The difference between those two numbers is variance, and variance is where your profit leaks become visible. The data from restaurants that shifted to systematic tracking is staggering. Variance dropped from an average of 5.8% down to just 1.2%. Counting time fell from 18 hours per week to under 5. And here's the finding that surprises most operators. When you can actually see actual versus theoretical usage, you discover that 40% of what appeared as mysterious shrinkage isn't theft at all. It's preventable process errors, overportioning, improper stock rotation, and ordering from gut instinct instead of data. Let's move from theory to reality, because this is where inventory intelligence becomes genuinely exciting. Consider a 50-seat casual bistro running manual counts every Sunday night with spreadsheets and a variance they couldn't explain. 6 months after implementing a systematic inventory approach, they reduced weekly counting time from 12 hours to 3. More importantly, they discovered their real problem wasn't what they assumed. Their biggest leak was ordering excess premium proteins as a safety cushion, then running fire sale specials as expiration dates approached. By letting data drive their par levels, they reduced on-hand inventory by 30%, freed up $18,000 in cash that was literally sitting in the walk-in, and cut waste-related losses by $19,000. Total first-year impact, $37,000 straight to the bottom line. Or consider a multi-location pizza chain that used variance analysis to discover 60% of their food cost problems originated from just 8 menu items. They re-engineered those recipes, retrained staff on portioning, and watched company-wide food costs drop by 4.2 percentage points, adding over $400,000 annually across their locations. This is not incremental improvement. This is finding the specific, actionable levers that unlock profit you have been leaving on the table, sometimes literally. The resolution is a fundamental shift from manual counting to automated profit control. Someone still has to physically walk the storage areas and count, but modern systems can eliminate nearly all of the paper chase surrounding that count. Digitized invoices update product costs automatically. Mobile apps guide staff through count sheets, even offline inside the walk-in, then sync when connectivity returns. Par levels generate order guides without manual math. Integrated sales data reveals depletion rates, usage patterns, and menu mix performance in real time. Accounting codes keep purchases organized and audit-ready without a single redundant data entry. Looking forward, the restaurants positioned to thrive are already using connected POS data, invoice automation, waste tracking, barcode labeling, and AI-assisted demand forecasting to make purchasing more precise and predictive. By 2027, the role of inventory manager evolves into inventory strategist, someone who orchestrates intelligent systems that anticipate price spikes, adjust par levels based on local events and weather patterns, and flag variances the moment they appear, not 2 weeks later. The paradigm shift is this. Inventory is no longer a storage problem. It is a real-time operating system for protecting and growing profit. Let's bring this home. Restaurant inventory management is the discipline of tracking ordering, storage, movement, usage, waste, and cost. Done well, it controls COGS, protects cash flow, helps price menu items accurately, prevents spoilage, maintains par levels, and keeps guests from ever hearing the words, "Sorry, we're out." We've uncovered the invisible profit killers hiding in your kitchen, exposed why manual processes cost operators tens of thousands of dollars annually, and revealed how systematic inventory intelligence transforms restaurants from cash-burning operations into lean profit engines. The core practices are practical and proven. Count consistently, organize your storage, enforce FIFO, train the whole team to treat inventory as money, track waste every shift, compare actual inventory against theoretical, and review your sales data daily. Automation makes the process faster and more accurate, but the real win is cultural. When everyone from the receiver to the line cook understands that inventory is money, the entire operation tightens. Here is your call to action. Don't try to overhaul everything at once. Start this week by auditing your current process. Time how long it takes. Calculate your variance. Identify the 3 items generating the most waste. Then pilot a mobile inventory app for just those items and measure the difference. The profit is there, waiting in your walk-in. Go get it. Like and subscribe for more helpful videos like this. Connect with Forks for the experienced accounting professionals your restaurant needs. Details in description below.